Hi guys, welcome back. So yesterday was definitely a roller coaster. The market was acting really crazy, super irrational. I think a lot of stop loss got triggered, as well as some margin calls, definitely. So that's why at some point it was dipping really fast. But suddenly the market just had a V-shaped recovery. And then today it's another mysterious day again. If yesterday was a V-shaped recovery, today would be the opposite V. So we have been riding those roller coasters ever since after the new year. Somewhat expected, because for the last few weeks I've been expecting a market correction for the medium term, but it really came much faster than I would have imagined. This is why a few weeks ago I set my strategy for 2022 would be increase my short-term position from 20% to 50%, so I can always have good amount of cash doing short-term trading, quick in and out. This has helped me avoid a lot of the crash and be able to buy large chunk of the dip, and I usually would take profit right after. So yesterday it was because of the war between Ukraine and Russia, but when I saw that yesterday, I was like having a little bit laugh. Not because I'm happy about war, but because the exact thought I had was, great, the Wall Street now has another story. Because the Wall Street just love taking advantage of this kind of news and make up the story and somehow tie up the stock market with those current news or politics and create large volatility, so then they can make money going up or down. First is the bond yield, then is the inflation, and then the rising interest or the tapering. And yesterday added the war again, so geopolitics. It sure did create a lot of panic in the market yesterday, but I don't really think that it's the main reason why everything fell so hard. Whenever there is war, even though it's gonna happen or may not happen, doesn't matter. Capital would right away flow into the US market for safety. And usually you would see the US dollar spiking up. Similar with what happened during COVID. You see this sudden spike up of the US dollar. This is because whenever something scary happening in the world, the money would first move into the US, especially from the emerging market. But yesterday, we did not see that much strong momentum for the US dollar. It's still under pressure because you saw that it went up a little bit and then came back down right after. Another indicator is that if war is really happening, we should see the spike of gold, because gold is a solid asset that can be a place for the money to go for safety. But I also don't see a spike for gold. It's been consolidating in the same range. With the news like war, it did not even help it break out of this trend line. So that's why I think the market volatility is really not that much driven by the news yesterday. And bond yields also had been coming down too. So a year ago, Wall Street had the storyline of connecting the bond yield with tech stocks or growth stocks. But right now the yield movement is not really driving the up and down of the growth stocks. The fact that it went down recently did not make the tech stocks go up. So you see, another storyline. So recently the storyline had been the rising interest rates. There were rumors saying that the Fed might increase 6 or even 7 times interest rate this year, while the original plan was only increasing the first time in 2023, right? And the cause of this is inflation. So that's why whenever we see inflation number going high, we would see a tech sell-off recently. So it's been like this for the past few months, that the Wall Street made us connect inflation rate with the tech stocks movement. So today I want to take this opportunity to share my view about the inflation issue and why I believe inflation would not be a problem and why it would not make the Fed decide to increase interest rates like 6 to 7 times instead of what they said about 3 times before. I think this is more like rumors spread out from the Wall Street to spread out more fear so they can short the market easily. So why do I think inflation is not a problem? It is only the last couple months to 1 year that we hear the word inflation all the time because things got so expensive and it's becoming a problem for everything. Because like for companies, for example, because they have higher prices, and for consumer, because they're not happy that things had gotten into so expensive and they don't have the will to spend as much as before. Now the Fed does not care about inflation to begin with, because the Fed's responsibility or their first priority should be employment rate as the main indicator for the economy. And this is why the Fed has been doing all they can do to solve this problem, and inflation was just a byproduct of this, but not their main concern. Why did inflation become a problem is because right now it's the government facing the people getting unhappy. This is why the President Biden had been putting so much effort to press down inflation right now, because people are not happy. This is why recently the consumer confidence index had been getting lower and lower, making a new low every month, because the products got to be more and more expensive. And for this, people are more unhappy. And when they're unhappy, it would raise much more negative voices. And now the support rate for President Biden got lower and lower as well. This is becoming much of the problem for the government, and that's why they are giving the pressure to the Fed to solve inflation, to do something about it. So this is the main logic behind. For companies, high inflation is a bad news for small companies, medium to small caps. But for large companies, they have the power to raise price and move this problem to consumers because they have the branding power. So inflation is just a process to increase the monopoly or the power for big companies and eliminate small companies. So this is a natural process. So inflation doesn't really damage companies. It just speeds up the elimination of the companies that do not have enough competitive advantage to increase their prices. But for consumer confidence, it directly relates to the happiness of people, of the population. Then this is the main concern for the government, and that's why they are giving pressure to the Fed to solve this problem. So that's the logic, right? So as long as we understand this, now the main problem is the happiness of people. That's the main concern for everybody. Because as long as people are unhappy, the support rate would keep getting lower, and this would affect the midterm election. And that's why it's becoming an urgent problem. So now I would share my view on how this is not a problem for them. I think they kept saying inflation is temporary. It's because of COVID, it's because of supply chain. Yeah, sure, those are true. But at the end of the day, what drove this the most was because of the QE. So I believe there is a good chance inflation is not going to go back. The prices for food that we buy every day that had gone up so much for prices, they are not going to come back down to the way before COVID. I think it's not possible. It's gone. No matter what the Fed does right now, it's not going to turn the prices of commodity back to before COVID. So I think what the government is promising every day, what the Fed is promising or saying what they would do to solve this problem is not happening. At least not the majority of the things. So I think the main reason for them to say this is a comfort for the population. It's mainly to comfort people, to calm people down. Okay? Now in the people, there is the rich, there is the normal population, so the poor and the middle class, right? For the rich, inflation is not a problem for them. Actually, inflation is kind of a natural process to move more money into rich people's pocket, while it's less money for the normal population, the middle class and the poor. So the poor become more poor. Now, at the end of the day, it's the happiness for people and it's consumer confidence. And for this, they had the solution long time ago. Because I think even long time ago, maybe 1 or 2 years ago, when COVID first happened, when they started to do the QE, they already had seen this coming. And what happened was that the big corporations already had those meetings together and decide how they're going to increase the prices slowly, so then people have less feeling for it and the least feeling possible. So I think together they had signed the agreement to increase the prices in a certain rate, certain speed. For example, for the food industry, there are only like 4 or 5 large companies that are monopolies. They can decide many things, make the rules and standard together, right? So as long as those giants agree together on the rate to increase the prices, then everyone would follow. Because if the price suddenly jump up, the consumer would take it as a shock. But if they increase slowly, like maybe every month or like a little bit every week, even though it's 5 cents, 10 cents every week, then the more you go to a supermarket, the more you shop, the more you've gotten used to it. No feeling. So until that point, they're still gonna increase the prices very, very slowly. Until at some point, people already feel numb about this. They already accept the new prices. And they're not gonna stay unhappy for this particular reason. Things would go more and more back to normal. I mean the shopping behavior as before. So I believe this is the solution for inflation since the beginning, long time ago. But right now, the government or the Fed keep saying things to comfort people that they're gonna press down the prices, and I just don't believe any of them. I think those are just to comfort people until it becomes more mild and people start to accept it. And at the end of the day is to increase the support rate because people are happy. So I really don't think the solution for inflation was to increase the interest rate or to reduce the US debt. I think this is what they say they would do, and it won't do much for the prices. And next year the inflation rate would come down significantly anyways, because the previous year has such a high basis number. So in comparison, it would look a lot better anyways. This is why I don't look at the inflation rate or the inflation number anymore, and I for sure won't tie inflation with the interest rate anymore. I don't believe in anything the news say. I just know that the short sellers take advantage of this and make up a lot of stories like this to connect the share price movement, so then they can drive or manipulate the majority of investors. So does that mean I believe that the Fed would not increase interest rates? Of course, no. I still think they would increase the interest rate, but not as aggressively as the media is saying or spreading rumors, like 6 to 7 times. I think they're going to increase rate at a normal speed that is not so aggressive. And maybe after they increase like 2 or 3 times, there will be some other problems coming up after that, like economy slowing down or even a recession. So that means by that time they need to decrease interest rates again. I won't be surprised if that happens. I think it might really happen in 1 or 2 years. But for this year, 2022, is still the cycle of increasing interest rates is still going on. So the market is still resetting the valuation. But I just want to share my view about the inflation and interest rate and point out how I think it's so ridiculous that Wall Street always make up these storylines to manipulate the stock market. And us retail investors always end up getting burned because we are easily manipulated. We are lack of news or information because news is always behind. They have been exiting their tech holdings a few months ago to prepare this, and now they are using this as a reason of the sell-off, while they had already sold long time ago and set up their short position already. So this is what I believe and want to share with you, so then we are not getting our emotion driven by this kind of news or storyline. With that said, it doesn't mean that the tech stock would grow no matter what the interest rate is. Right now, I think we are dropping because the valuation needs to reset. It was too high. It needs to correct all the valuation that's been pumped by the QE. That's the truth, and that's the reality for me. Now that's it for today. And if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. make sure you subscribe to my channel and give me a big like. Thank you.